Hello, everybody. Welcome back to our weekly episode with JOMO of crypto market updates and AMA. How is it going, JOMO?
Hey, CM, it's going fantastic. Thank you very much. How are you doing?
I'm great, man. I'm great. Was a good week. Was a good trading week.
Yes, we had some good trades. You nailed Dow, didn't you? That was a good trade. That was a fantastic trade.
Yeah, man. Yeah, man. Very, very serious trade. We have some questions today from the group. Okay, let me ask you this question. We have
Good, good.
so we have a question regarding like trade management. So the question goes like that: when to come out of a trade if the market is choppy and the trade is not hitting targets immediately, okay, but you're not getting stopped out neither. So what are the main factors to look for?
All right, all right. Questions regarding trade management is something I do like. So, whoever asked that question, shout out. That's a very good question. It seems that you're serious about trading, and I like it. All right, so let me just show you an example, all right, of a trade that I know that you guys in the group took, and how can we understand that we need to get out of it, even though the trade was not did not hit our stop. So this is theta, all right. So I know that you guys entered on this day, so the 5th of August, right? So the entry price was 1.55. The stop was the low of the day around 1.4, which is just a little bit below 9.7%, which is the maximum stop that I would go ever. And this is of course the daily, so it's not a small time frame, it's a big time frame, so that's good. And in anticipation for a breakout with some events that's going to happen to theta as well, you bought the breakout, right? So let's assume that you guys bought the breakout. Now you're all excited, and you already made around 10% on this trade, and it's been a day or two. 10% in a day or two in this environment is okay. So what do we need to understand? What factors do we need to watch to know if we need to cancel this trade, right? Not cancel, just get out even before we get stopped out. So one factor is, of course, how it's acting, right? So from the moment it broke out, I wanted to always kind of continue to show follow through. So you can see that if we talk about follow through, the first day right after the breakout did not show a big follow through. Okay, so that's the first violation. I don't like it. Though it didn't penetrate too much, it got back, retested, the entry level. That's okay. Then we had follow through on the second day of the trade, and that was a good sign. However, we can see that the volume, all right, that's the second factor we want to look at after just the price action follow through. We want to see the volume in the follow through. How does it look in comparison to the breakout volume, for example? And we see that the volume here was quite small. And not only that the good volume here was quite small, as we can see over here. And the next bar, which was a red again bar, took us all the way down with elevated volume. Now that's another violation. So first of all, we didn't have enough follow through. Then we didn't have good. We had a bad day of bad volume on a bad day, and then today we had another bad day retesting. So, and then we're going to reach the third factor: is the strategy of the trade working out? So this is a breakout trade. So we understand that we had an accumulation phase. We had a sideways of around, let's see how many days. So we were consolidating for around 84 days. That's a big consolidation. All right, doing kind of a cap, like a bottom kind of cap thing over here. We broke out, so we want to see follow through. We want to be bigger volume. We want to see good closes, and we don't want to see it retest too much our entry level. So if that was me, for example, I would at least reduce 50% of the trade as the moment of me understanding that the strategy breakout didn't work out. And I know that's something that you do as well, right, CM? Whenever something doesn't work as you expected, you will at least reduce 50% of it once you notice that. Is that correct?
Yeah, yes, I will
Yeah.
reduce, and I also will raise my stops to break even. and then I'm good, you know, because it already hit first target. We had a first target. I think it hit our first target, but then it failed. It failed to continue, and we always also watching the general market in Bitcoin, you know, when you trade in breakouts. So once you see the weakness, a possible weakness coming, you immediately should raise your stops to break even, because you don't want to take any additional risk on your capital. That's it.
Exactly. And you took me to my fourth factor would be how is the market reacting to its own price action. So we know that BTC and ETH are what's leading, right? ETH was a leader and BTC, of course, a bit lagging, but both of them, the big dogs, are what's deciding how the market will move. And if we are starting to fail from significant areas, there's a high probability of a breakout failing. For example, Theta failing right now. And you said something correctly. I would do something more or less the same. Whenever I see this kind of action, all right, let's say I bought on this day, it was the 3rd of August, August 3rd, all right. And then on the 5th of August, I saw this for 7th of August, sorry. Why am I confusing? Oh, 5th. 5th of August. Then on the 7th of August, I saw this. I would have raised my stop at least to this level, right? And to minimize my risk, because yeah, we already saw good gains happening over here. I saw my breakout going to at least 6% and even more over here, maybe 9%, and then going all the way down and giving me a smaller risk. So I would minimize my risk and put the stop over here. So maybe just to make sure that you guys understand. So I would do two things. One, I would reduce the position at least 50% at least if I see that the strategy of the trade isn't working out, and I will minimize the risk, right? Our first stop was a bit less than 10%. I will minimize the rest of the 50% to a maximum of 2.25% risk below this candle over here. Now, maybe here I just leave it and see how it works out. Maybe just, you know, consolidates at that breakout point and continues, and maybe I add on if it continues. And if not, I'm getting stopped out and I'm in profit because I already sold. You already took a first take profit around here, I think you told me, and then I minimize 50% here, I break even. So what's left is 50% after I took a little bit of profit. So I'll be either break even or either in very small profit out of this trade. And for me, I don't care if I don't get a huge gain, even if it took a few days. I'm okay with it as long as I don't lose too much, which is my main goal at all times.
Perfect. All right, guys. Hope you understand that one. So we move into the next question. By the way, that was an amazing question regarding, you know, how to really manage your trade when you're in a breakout trade and you don't know what you're doing. This is a perfect questions. Keep those questions coming because we are here to make money and become a better traders. So thank you, Jag. Shout out to Jag. Now we have another question regarding cycles. Okay, he was asking. He's saying other YouTubers or influencers go by the history of cycles, okay, highs, lows, etc. What's your thoughts on how relevant is history of cycles to the present?
All right, that's a good question. That's a question I dabbled with in the past as well. So I do have some thoughts about it. I'm just going to put the Bitcoin log chart over here just for us to see maybe what the question is referring to and maybe to assist me answering this question. I would say one thing. I would say that the more crypto and Bitcoin are adopted, the less I would rely on past history. And I will explain why. Past history is mainly made out of retail investors, okay? So if I take these cycles, okay, all the way to these areas, these are mainly retail investors, okay, that made these price action. And retail investors are psychologically affected very differently from fund managers and institutional investors. One, because they're less experienced, so they are more prone to act on their psychological issues, for example, FOMO or greed and fear, than other more professional investors maybe. And they are less correlated in their mind to other risk assets such as the stock market, right? So And if we now go to these areas over here, this cycle was mainly thrusted by institutional investors, such as, when we started, what it was MicroStrategy, Paul Tudor Jones, Tesla and Elon Musk, and a lot more professional, let's say, investors. When I say professional, I don't mean they're better. I just mean that that's what they do kind of for a living, right? A lot of fund managers, a lot of money managers, and so on and so forth. So whenever, for example, someone tried to anticipate what's going to happen in this cycle, all right, on what happened in past cycles, you would fail. For example, one would assume there is I know you heard about it, CM. There's a theory called the Elliott Wave theory. You heard about it, right?
Oh, yeah.
Yeah. So Elliott Wave theory, I know some people trade upon it, which is good for them. Okay, it's something that I used to incorporate within my own trading in 2017. It basically means that the market will go up in waves and down in waves. It's 5 waves basically until the end of one cycle. So for example, if we go in this area, so I'll just paint it. So that would be, this is 1. All right, then we have the second one down. That's number 2. Then we have wave number 3, which is all the way up. That's wave 3. Then wave 4 downwards, and the last one, always the 5th wave, and will end in a blow-off top fashion. Same thing happened more or less in 2017. Now it depends. It's a bit different because here you had a bit more professionalism than in the first cycle, but more or less the same. And then it ended. But in this cycle, we didn't have it. So, for example, one could argue that this was leg number 1, then leg number 2, all right, and then leg number 3. And when they assumed that this was leg number 4, and then we're going to get the 5th leg up will blow off top, it failed, right? People assumed it's going to be until the 100K, let's say, or 200K, doesn't matter, right? And it failed upon us. Why did it fail? This is an expectation breaker because institutional money, or whales, whatever you want to call them, just took the opportunity of everyone being really hyped at around the 70K and just dropping their profits upon us. And they did that because their views on the market is different. They look at the market cycle of the entire ecosystem and what started happening around the world, and the money printing issues, which they knew that can cause inflation, and so on and so forth. So their views are much different than someone from these area of cycles. So I think what I'm trying to say is that I would not rely on past, neither fractals nor past history to predict, right, what might happen. What I would use, and that's something that you can use, are areas of confluence in price action, right? So support and resistance. So let's say, the 20K over here was an area which many people thought about as the bottom. So all the way over here. And if you look really carefully, you had a 17K-ish top over here from the dead cat bounce. So you can see that confluences areas can help you make better decision on the spot, right? On what can happen in the short term, and where do I want to buy, maybe where do I want to sell, where do I want to start DCAing, where do I think a very important thing might happen. But everything is just probabilities. But I wouldn't try to predict, and I wouldn't go with predictions based on history, okay? What do you think, Siam?
Absolutely. Predictions are nonsense,
Yeah.
You saw what happened with the plan B model. You could
throw
it from the window, man. I was selling at the 69 fake out, running away because it was obvious we're going down, man. And this cycle topped in April, while the prior cycles tops in the end of the year, right? So that was complete violation of the whole 4 years cycle debacle.
As well.
So you don't want to cling or stick to other people opinions regarding cycles, because they are people, and people always wrong. You always want to listen to the markets. The markets are never wrong. Play your game by the way the market moves. Follow the strength. And if you see weakness in the stock market, you see strength in the dollar, you see the economy is crashing, pay attention, man, because the 4-year cycle will get thrown out of the window, you know, in the first minute when you know, when the whole market, the whole world is like in a crisis environment. Okay, so cycles to me are fluff, you know, I can say it better. It's just a bunch of fluff, you know, to sell to the average investor or hodler, telling them, hey, bro, put your money here for 5 years. According to the cycles, you're going to have 130K Bitcoin in 2021, blah, 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 blah. And look what happened to all those investors. Got broke, lost all their houses, lost their wives, lost everything. They're broke, man. Some died. You know, you never know what happened to people, man. So my 2 cents, don't listen to cycles. Trade the way you know how to trade. Trade with your strategy, with moving average, you know, the way you trade. And yeah, man, I think we can call it.
Yeah, we can call it, but let me just say one more thing, okay? 2 things. One, influencers try to sell reassurances. There are no reassurances. So if someone tells you, we are bottoming right now, this is it, you should buy here, life-changing money, don't listen to him, okay? He might be right, but it doesn't mean, but on the long run, okay, he probably was lucky, and if you listen to him more than once, you're going to probably go bankrupt, okay? So no reassurances, never, okay? Second of all, I would say this: don't look from top down. Top down meaning to look at the cycle towards what do I trade, okay? Yes, have the cycle in mind, but always trade bottom up, meaning that I would look at this, I would look at the coins, right, or stocks, whatever you're trading, and I would start to see if there's something proliferating. If you're seeing setups, if you're seeing more than one setups, if you're seeing breakouts working, okay, work with them, okay? Put your money on the assets that are working, okay? And don't put your money on the cycle, because if assets are working, maybe Bitcoin doesn't move, right? Maybe ETH doesn't move too much, but OP did 100%, or 300%, but ETC did 200%, right? The other day, nothing moved, but Rose did 30 or 40%, and I think Cell made 40 or 50%. Nothing else moved, right? But just look at the setups. Trade the setups, don't trade the market. That is how I do it, and that's the way I know many professional traders that are actually making money consistently do it. Yeah, that's what I want to say. I think that's good. What do you think, CM?
Yeah,
that's a good call.
That's a very good perspective. You know, the cycles, and when people looking on the cycles and the big picture and the big markets, they miss out on spectacular trading opportunities that happen in individual stocks or coins. And this is mind-boggling to me, because they coming back later once the coin is already up to 100% and is on its all bull market, and they say, oh man, you should have told us before, you know. So you know what I mean? People are like, they need to learn how to you know, not listen to all much the herd, you know, the mentality, and look for their own trading strategies and the way to make money. And man, you can short the market, you know, you don't need to, you know, you can short the market, you know what I mean? People can can make money all the time. So
we shorted in the group. We shorted quite well, I think, all the way down from 37K. That was a huge short on the super performance group. That was a good one.
Oh yeah. That we nailed it there. But yeah, guys, well, thank you very much for listening. If you have more questions for the next episode, please comment down below. We're going to address them. Thank you very much, JOMO, for being with us another week. See you all in the next week.
Bye-bye, everyone.
Cheers.